Now, why do we believe that EVs are the way to go? We are examining battery technology, but more significantly, we are examining powertrain technology, which encompasses batteries. If you look at the drivetrain cost curve, you'll see that costs decrease by about 28 with each cumulative doubling in the number of electric vehicles produced, sold, and otherwise consumed. Indeed, it appears that owning an electric car now comes with a lower total cost of ownership than owning a gas-powered car. Prepare for a thrilling voyage into the world of finance and creativity. This December is a date that both investors and Tesla aficionados should put on their calendars. There's a pricing bonanza ahead, and the inspirational Cathie Wood is at the center of this gripping story. However, what mysteries lie beneath the surface of this historic event? Come along as we unravel the secrets and delve into the profound insights of Elon Musk and Cathie Wood, the CEO of ARK Invest. We'll reveal the factors influencing our future, from Tesla's never-ending pursuit of invention to the ever-changing field of electric vehicles and artificial intelligence. Get ready for an exhilarating journey into the halls of disruptive technology, a realm where creativity has no boundaries. Will venerable behemoths like Ford and General Motors meet the challenge head-on, or will the winds of change carry them away? What does Tesla's multi-phase business strategy hold in store? How will artificial intelligence keep transforming financial tactics? The solutions are waiting for you. Await surprises, learnings, and a hint of tension as we set out on this fascinating adventure. Please be sure to hit the like and subscribe buttons before we eventually get going. Let's get started now that issue has been addressed. Cathie Wood recently wrote to Tesla shareholders to let them know that they should look forward to an exciting Christmas season because the company is about to unveil some groundbreaking developments. More corner cases, disengagements, accidents, and similar incidents have happened to the Tesla autonomous project than to all other international businesses put together. These disclosures come to light in the context of artificial intelligence technology's astounding advances, which are happening remarkably quickly. It is impossible to overestimate Tesla's proactive role as a pioneer in autonomous taxi systems. It is the biggest I project in the world. As a result, Tesla's position in investment portfolios has changed. It used to be the top holding, but is currently ranked third. The decision to divest over 20 million shares of Tesla was made in response to its notable 150 increase in comparison to other assets. Profit-taking tactics have been used to counter these moves on a regular basis. Elon Musk's worries about the economy and Cathie Wood's vision of a future in which General Motors and Ford become the major players in the electric vehicle market are similar. This common viewpoint recognizes the profound transformation of the automotive industry toward electrification. For established manufacturers like GM and Ford, however, the road to profitability in this dynamic sector presents significant obstacles. This complicated shift is highlighted by several important factors. Making the switch from internal combustion engines to electric vehicles requires significant supply chain modifications, infrastructure construction, and retooling. In order to fulfill the increasing demand for EVs, achieving scalability and production necessitates large expenditures and operational changes. Long-term investors of legacy automakers are used to the rapid returns and conventional combustion engine earnings. These investors frequently place a higher priority on dividend payments and quick profits. These expectations might not align with a business strategy that shifts toward long-term electric vehicle development. The electric vehicle market has transformed into a fiercely competitive one, as tech-focused businesses such as Tesla, Rivian, and Lucid Motors are upending established players. To keep a piece of the EV market, established automakers will have to compete with these nimble upstarts. Automakers switching to electric vehicles must comply with strict emissions and environmental standards. To build automobiles that comply with changing government regulations, this calls for research and development expenditures. Legacy automakers must adapt to shifting consumer preferences and expectations, which are frequently impacted by elements like range, charging infrastructure, and environmental conscience, even while interest in EVs is growing. A new set of parts, including batteries, electric motors, and power electronics, must be purchased in order to convert to electric vehicles. Building a strong supply chain for these new components comes with its own set of difficulties. Success depends on changing the brand's perception from that of a venerable automaker to that of an EV leader. For legacy manufacturers to properly communicate their commitment to electric mobility, they must engage in marketing and branding. The creation of an extensive infrastructure for charging electric vehicles is essential to their uptake. If traditional automakers want to see widespread adoption of EVs, they need to invest and form partnerships in this area. Although Elon Musk and Cathie Wood both see major roles for GM and Ford in the EV industry in the future, they confront different obstacles. Achieving scalability, satisfying shareholder expectations, and catering to changing customer preferences all need to be carefully balanced in order to adapt to this dynamic environment. Be focusing on Tesla, its diverse business strategy encompasses technology, batteries, solar energy, and even space exploration, all while navigating competitive challenges in the fast-evolving automobile sector. These varied projects make one wonder how Tesla makes money and affects the value of its stock. The complexities of Tesla's business strategy and its financial ramifications are covered in detail in this conversation, is the main driver of many of these investments because of its revolutionary potential. Notably, Cathie Wood is well known for her visionary approach to investing, and her compatibility with a technology is indicative of the technology's growing sway over a wide range of businesses. A standout investment in Wood's portfolio is Tesla, which represents the nexus between artificial intelligence and the automotive sector. Tesla's AI-driven autopilot and fully autonomous driving technologies demonstrate the company's dedication to innovation in autonomous driving. Coinbase, a cryptocurrency exchange platform, is a prime example of how AI is being integrated into the financial industry. It uses AI for trade analytics, fraud detection, and risk assessment. Leading streaming service Roku uses AI to improve user experience and curate content recommendations in order to remain competitive in the quickly changing streaming market. Zoom uses artificial intelligence to improve the quality of its video conferencing services with capabilities like real-time transcription and virtual background detection. This is especially important in the area of remote work and communication. NVIDIA, a major player in the AI hardware market, creates GPUs that are tailored for AI machine learning applications, which speeds up the AI workloads across a range of industries, including gaming and healthcare. Through chatbots, virtual assistants, and automated messaging, cloud communications company Twilio enhances client interaction by incorporating artificial intelligence into its services. Roblox is a user-generated gaming platform that uses artificial intelligence to regulate content and promote games, making its users' experience safer and more entertaining. Popular game engine Unity uses AI to produce a more realistic and immersive gaming experience, which makes it a vital tool for game producers. The business that created the EOS blockchain platform, Block, D1 exemplifies how artificial intelligence may be used in blockchain technology to improve the functionality and efficiency of decentralized apps through data analysis and smart contracts. Cathie Wood's deliberate focus on investments that are linked with AI is a reflection of the growing ubiquity of AI technology in several industries. These assets are essential parts of her investment strategy because they show a progressive mindset that recognizes AI's capacity to create and disrupt. This recent correspondence offers insightful information about how Tesla is changing, the difficulties faced by conventional manufacturers in the EV market, and the crucial role that artificial intelligence and technology plays in her investment portfolio, which is directed by an outlook for the future. She thinks artificial intelligence will bring about big changes, possibly disintermediating some platforms, including industry titans like Google. Wood makes the argument that artificial intelligence might present problems for businesses like Google, because people might increasingly turn to ChatGPT and other AI systems for quick answers rather than traditional search engines with their links and adverts. Wood does concede, though, that Google is adjusting to this AI-driven change by offering straightforward responses, which may ultimately be advantageous to them. The ever-changing landscape of technology, including wearables and augmented reality glasses, creates uncertainty about which companies will succeed in the next wave of technological innovation. In the tech sector, supremacy in the future is not always guaranteed by past achievements. Wood's investment approach places a lot of emphasis on artificial intelligence. She understands that artificial intelligence has the potential to be enormously profitable, with $20 in software income possibly being generated for every dollar spent on AI technology. This demonstrates how important AI is to fostering innovation and increasing revenue in the technology industry. Notable is Wood's persistent bullishness on Tesla, even in spite of the company's recent terrible stock performance. With Tesla being ARK Invest's top stake, the investors' belief that the business will transform the automobile sector is evident. Wood has voiced faith in Elon Musk's capacity to overcome obstacles, pointing to his proven track record of triumphing in the face of difficulty. The question is whether Wood will stick to her bullish view of Tesla's future or whether she will need to reassess her investing approach in light of the company's continued difficulties and shifting dynamics in the tech and automotive sectors. Investors are eagerly awaiting the resolution of this story, but only time will tell. Cathie Wood's unshakable belief in Tesla's potential for enormous success is supported by a number of important reasons that she thinks will raise the stock price of the firm to record levels. Tesla is set to disrupt the game with its calculated forays into a variety of industries, including robots, artificial intelligence, and energy. This all-encompassing strategy goes beyond traditional auto manufacturing, which distinguishes Tesla in the sector. Notable is the recent instability in the electric vehicle industry, which is mostly related to worries over demand. Older automakers with more aggressive ambitions for EV expansion, including Ford and GM, have backed off. Tesla, however, has a clear advantage thanks to its fully autonomous technology. When combined with its FSD capabilities, Tesla's pricing strategy sets it apart from its rivals. While Tesla is willing to offer cars at zero profit initially, it anticipates recouping income through autonomous taxi services powered by FSD. Innovation is highly valued by Cathie Wood, who also emphasizes that businesses in deflationary times have to sell their goods at a loss or risk suffering significant financial losses. Tesla is not like other manufacturers because it is a cutting-edge and extremely innovative company. According to recent reports, Tesla's Cybertruck with an 800-volt design will charge more quickly and have higher profit margins because its battery packs will weigh less and cost less. The successful bulletproof testing of the Cybertruck, as disclosed by Elon Musk, strengthens Tesla's competitive advantage and profitability in the EV industry. Tesla is still expanding, even though it is the biggest F producer in the world. Realizing the value of the driving experience, it intends to redesign the interior of its cars. Delivering 1 million cars to European consumers and commemorating 40 years since Tesla's founding is a noteworthy accomplishment. Tesla has strengthened its market position by demonstrating its leadership in autonomous driving technology and making its full self-driving beta software available to more customers. According to Cathie Wood, Tesla is well positioned to grow into a multi-trillion-dollar corporation over the next 5 to 10 years, thanks to its innovations in the battery and solar industries. Tesla's popularity is increased by the fact that EVs are environmentally benign, especially when they are powered by sustainable energy sources. Adoption of LFP batteries, which are affordable and appropriate for regions such as China, could considerably increase Tesla's market share and profit margin. The way in which these elements affect the price of Tesla stock is still a topic of great fascination as the story surrounding the company develops. With her insightful analysis of Tesla's possible future, Cathie Wood has captured investors' interest and made them anxious to see how it all works out. We would have to end it here today, gentlemen. We studied the ideas and viewpoints of visionary personalities like Cathie Wood and Elon Musk, giving light on the ever-evolving world of electric vehicles, artificial intelligence, and disruptive technologies. We've looked into the factors influencing the future of several businesses, from Tesla's unwavering dedication to innovation to Cathie Wood's calculated investments informed by AI. A few important questions come to mind as we move on. How will Tesla handle the opportunities and difficulties brought about by its broad corporate strategy, which includes everything from EVs to AI and beyond? What are the methods that will propel the successful transition of established automakers such as Ford and General Motors into the electric vehicle market? What effect will AI still have on investment plans and businesses that rely heavily on technology? Please feel free to add your ideas and observations in the space provided below. In order to receive future updates on the exciting world of Tesla and cutting-edge technology, please consider giving us a thumbs up and subscribing to Tesla Stock News if you found this debate to be interesting and educational. Appreciate you coming along on this exploration and learning trip with us.